Grand Rising people, welcome to Phantom Vitality, where we discuss news, tips, and takes on health, wealth, and the world at large. Here's your crypto news update. Started off with the Bitcoin price. We're at $41,460, down 3.7% on the day, 12.1% on the week, 18.5% on 2 weeks, 18% on the month, and 34% on the last 2 months. But overall for the year, we are still up 12.3%. So we're still not in the bear market yet because Bitcoin is still, Bitcoin is still over the price that it was at, within the last year. If the price was, much lower, if Bitcoin went back to like 35 or like 30, then maybe we can say that we're in a bear market. But I don't think Bitcoin is going to be going towards a bear market just yet. Like I said before, there's blood on the streets. We'll also actually take a look at the Ethereum price before we go into fear and greed. Ethereum is at 31.5553. So they're going in the same direction, down 6.8% on the day, 15.1% on the week, 23% on the last 2 weeks, 26.8% on the last month, and 31% in the last 2 months, but it's still up 161% for the year. So now we're going to go into the fear and greed index. Yesterday, the fear and greed index was around 15. And today, the fear and greed index is at extreme fear at 18. So it's very, a lot of it is really it's like double Dutch, this whole entire market. It's really like double that. You got to know the right moment to jump in. And not financial advice, but if you are, looking to buy in, this would be a good time to buy in because Bitcoin's price is low. There's extreme fear. People are and it's like what Warren Buffett said. We should always remember the quote that Warren Buffett said, because when you remember this quote, you'll always, be on point and be on game. So Warren Buffett said, be fearful when others are greedy and be greedy when others are fearful. So this right now is a point where if you are thinking about it, if you're considering it, if you have the cash laying around, just put it in a small rate. This is why dollar cost averaging is also good, because with dollar cost averaging, you wouldn't even have to think about should I buy in now? Should I not? Because you're buying when it's low and you're buying when it's high, but you're balancing it out when you're doing both. So we have a couple of news stories today that are pretty intriguing, pretty thought-provoking. What I want to start with is GameStop. So we have GameStop. They're hiring a 20-person team to develop a gaming NFT marketplace, and their stock rose 31% in after-hours trading as a result of this news. So let's read on. It says, congratulations if you spotted the Easter eggs in GameStop's jobs advertisements. Turns out the video game retailer is really getting into crypto. GameStop has created a new unit for building an NFT platform and hired more than 20 people thus far to run it, according to a report today from the Wall Street Journal. The platform will allow customers to buy, sell, and trade NFTs of video game items such as clothes and weapons for player avatars. See, again, like I said before, if you're somebody who's trying to make clothes or make weapons for specific games, there it goes. If you're trying to make digital clothes, people who are focused on making digital clothes, like right now, within the next 5 to 10 years, they're going to be in a very good position and they're going to have their own digital clothing lines, and they're going to be getting it in. So let's keep it going. The company had previously placed ads looking for engineers and others for the team, excuse me. GameStop stock duly surged 31% in after-hours trading to reach $170, its highest price in nearly a month. Prominent video game publishers such as Ubisoft have begun incorporating NFTs, blockchain-based deeds of ownership for digital items, into their titles. In-game NFTs open up the possibilities of games becoming interoperable and players profiting from trading rare items. Rumors have been percolating for almost a year that GameStop would jump into the NFT sphere. An April 2021 job posting on its website sought an analyst with knowledge of crypto, blockchain, and NFTs. In May, a landing page for the company confirmed it was looking for exceptional engineers, Solidity, React, Python, designers, gamers, marketers, and community leaders to come aboard an Ethereum NFT project. And Loopring's token price tripled in November on speculation that it would be involved in the marketplace. Today's news gives GME stock another boost as it hops aboard a multi-billion-dollar trend. Reddit-based day traders promoted GME as a meme stock last January, rallying the price from a middling $20 per share to $483 at one point. It's since come down from those highs, but has used the increased interest and capital to innovate. So, of course, we're keeping it going with NFTs. NFTs are continuing to develop. Looks like GameStop is going to create a new marketplace, and as great as it all sounds that these new marketplaces are coming up, it's gonna reach a point where it's gonna get overwhelming because there's gonna be so many different marketplaces to go to. You're gonna have OpenSea, you're gonna have Rarible, you're gonna have Nifty Gateway, you're gonna have GameStop's NFT marketplace, and it's gonna get really and my question is, with all of these platforms, who is going to be taking the most money from the people who are developing these NFTs and creating these NFTs? So is GameStop going to be taking a big fee? Maybe. We don't know. We don't know how it's going to look. It's bullish news for NFTs and Ethereum in general and crypto in general when you see that GameStop does want to get in on this and they do want to create a marketplace for it. At the same time, it's going to be very interesting to see the reaction and the direction that it goes in, especially considering the fact that a lot of these AAA gaming studios are probably going to want to create their own NFTs and sell them, off their own platforms, and just have to deal with the mining fees and whatever like percentages that the other crypto platforms are gonna, offer. So what we're gonna see is as this competition begins to grow even more, we're going to see, not a price, maybe a price gouging in terms of how much these, platforms are taking. And ultimately, what's going to really trump that is if there becomes more of a DAO NFT marketplace. If there's a DAO NFT marketplace where they're not taking that much of a percentage and it's run by the community of people who are creating the NFTs, then we're going to see a lot of, obstacles for GameStop. And ultimately, what we're looking at is philosophy of decentralization. I always remember this is the philosophy that we have to be, moving into, which is decentralization. We don't want to be moving into a centralization. And for the masses, it's very easy for them to, be centralized in the way they think, in the way they move, in the way they do things. They'll go to Walmart all the time. They'll go to Target all the time. They'll go to Best Buy and all these places all the time, and Amazon all the time. They're centralizing it. And this is honestly one of the reasons why wealth inequality, exists in the way that it does. Instead of people saying, okay, I'll invest into a smaller business, they're just thinking, oh, let me just buy this because it's the cheapest thing, and I'm they're not making enough money for this, that, and the third, so they want to go and do this. And then ultimately, we don't want to move like that. We want to move in a decentralized manner where we can invest into the other smaller opportunities so the little guy can grow, and not, little guys plural can grow, and not one little guy growing into a Godzilla, and then all of a sudden we hate this Godzilla now because we've been feeding it everything. Even that within itself is a ridiculous narrative, where people say, oh, Amazon this and Amazon that, Amazon this and Amazon that, but who were the ones who were putting their dollars into Amazon? Like, and what do you expect to happen? It's like people, and I've noticed this, I've seen this even on all levels, even on on a street level. I've seen people, selling weed on a corner, and they'll, make a certain amount of money and start making more money, and people will see that they're starting to make money and they're starting to save their money, and they'll be upset. They'll get upset when they see those people making money, and they don't want to buy weed from them anymore because they're saying, oh, you're successful now, so, oh, I shouldn't support you because you making too much money. Like, that doesn't make any sense. Like, just because they take their money and then they save it, and they're like, I have to save this money to do what I have to do with it, and you take your money and flip it off on whatever, you can't be upset about that, and it's really weird that people act like this. But going back to this GameStop NFT thing, I think it's good that GameStop is also, establishing that they do acknowledge the community that helped grow their stock during that whole entire Wall Street bets thing that happened. And it was really just one person who started it, and it grew from there, and people were throwing their money into it, and they were making a ton of money. I never got into it because I didn't really see, I wasn't there early. I wasn't on Wall Street bets. Like, you had to be on Wall Street bets early to really see what was going on. You had to see the thread, and you had to be like, okay, I'm gonna put some money into GameStop and whatever, and you had to get out quick enough. And it was a whole saga, and Robinhood like shut down trading of it. So a lot of people who had money in there and made money off GameStop couldn't get that money out because of the fact that it was locked. Like, Wall Street decided that they were gonna turn off the machine, when they realized they were losing. So it was a very interesting moment that happened last year, and ultimately, will other moments like that happen? Who knows? It's really interesting to see what's gonna happen. But GameStop bringing out their own NFT platform and hiring 20 people to work on that. This is, of course, on the heels of the news that, Ubisoft is working on NFTs on their own as well. And I don't understand why a lot of gamers don't like NFTs, because they already get downloadable content. They already buy downloadable content anyways. Like, it's the same exact thing. They're just going to make downloadable content NFTs. So that way, it's even more validated that if you have a certain weapon or certain item of clothing or a certain pair of sneakers or certain anything, that it's official that you own that. It's not just like, you're just buying a $5, DLC and that's it. Maybe the issue is the price. Maybe they have a problem with how much it's going to cost. But ultimately, you can buy an NFT for fiat. Like, there's already platforms that sell the NFTs for fiat. Like NBA Top Shot, they sell their NFTs for fiat. So it's never going to be an issue where you have to buy it, and Ethereum is going to be too expensive. I don't think so. Of course, ultimately, when you have the very rare items, yeah, those are going to be expensive. But in terms of like basic, DLCs, I don't think that they're going to try to tax people crazy on that. So moving on, let's get to this next story. Let's keep it in gaming. So we have this project, this game called Sunflower Farmers, blowing up, and as a result of it blowing up, it's causing the Polygon network to clog up. And this is what I was talking about before, when Vitalik, in the video where we were talking about Vitalik saying that Bitcoin Cash was a failure, and one of the people who responded to him on Twitter was talking about it being so clogged up and the fees and all that. It's just the demand. It's just supply and demand at the end of the day. It's really no different than if there was, a Philly cheesesteak store in Philadelphia and it popped up and everybody was like, this is the place to go. This is the place to be. And as a result, a bunch of people start lining up at the door. They're gonna have a harder time making this stuff. And if it really gets to the point where they're like, all right, we're running out of stuff really fast, and this stuff is starting to cost more to source in terms of the bread, in terms of the steak, in terms of the cheese, in terms of the peppers, we're gonna have to raise the prices. So it's no different. I mean, right now I'm in Houston and there's a breakfast restaurant that's not even that great, but people line up out the door, like down the entire block to get to this place. So people cannot just walk into this place, get like a waffle with eggs and bacon, and then leave immediately. They have to stand there. They have to wait maybe 15 minutes to go in, and then they have to wait maybe another 15 to 20 minutes to get the food, and then they have to leave. So let's read. Polygon is built for crypto games, but Sunflower Farmers' sudden surge in players is spiking gas fees and slowing transactions. Shortly after CryptoKitties launched on Ethereum in 2017, the immense demand for the NFT collectibles game clogged up the blockchain platform, driving up fees and slowing transactions. Now we're seeing the same kind of issue with a new NFT game released on Polygon, a network designed specifically to scale better than Ethereum's mainnet. Polygon's gas fees for executing transactions have been significantly elevated over the last few days, with the culprit is Sunflower Farmers, a simplistic NFT-driven farming game that has seen a dramatic uptick in players and activity. DappRadar reports over 434,000 unique users over the past 7 days, a 3,704% increase over the previous span. That's also a much higher tally than the second largest Polygon app, Decentralized Exchange QuickSwap, which recorded over 241,000 users over the last week. So based upon this tweet of the game, it looks like it's like some kind of Farmville, Animal Crossing, Pokemon kind of mashup, which ultimately, people are going to go crazy over clogging up the market. So let's continue. The rising demand is impacting the usability of the Polygon network. Gas fees have increased dramatically this week, with Polygon scans showing an average gas fee of nearly 764 gwei on January 5th. That's a dramatic increase over the average rate, which fell below 72 and 115 gwei daily during the last week of December. In US dollars, it means that a Polygon transaction fee has jumped from what's often a penny or less to as much as 50 cents, depending on the complexity of the transaction. That's still a fraction of the price of an Ethereum mainnet transaction. But for games and other applications that utilize a lot of transactions, the fees can start to pile up for users. In tandem with the elevated gas fees, users have complained across social media, Reddit, and Polygon's Discord server about failing transactions. Philippe Costanguet, product director at blockchain game developer Horizon Games, tweeted on Wednesday that 11% of Polygon network validators are failing to submit blocks amid the rising demand. These are the type of problems that Polygon was created to solve. It's a sidechain scaling solution that enables faster and cheaper transactions than Ethereum's mainnet can handle. While that's still true, even with this week's surging gas fees, the rising costs suggest that the network may struggle to handle periods of elevated demand. Sunflower Farmers is a play-to-earn web game that rewards players with crypto token. According to DappRadar, the game's surge in players came following the launch of wood chopping and stone mining features that generate rewards. Farming games have also been popular on the Wax blockchain in recent months. According to security researcher Thomas Kerbel, Sunflower Farmers' blockchain contract is updating the Polygon network with every player's status approximately every 25 minutes. So now we see what the problem is. The frequent communication with the blockchain may be elevating demand on the network. And then we got this guy's tweet right here where he's saying it turns out that the developers considered it a good idea to store the current game state of each player on the blockchain every 25 minutes. And who would have guessed a new monetary incentivized farming game attracted a ton of bots trying to extract value as well. So let's keep reading. Some users have described the situation as being akin to a distributed denial of service attack, given the impact that Sunflower Farmers is having on Polygon this week. Over the last 3 weeks, Sunflower Farmers has been responsible for more than 2/3 of the network's total gas usage, according to Polygon Scan. While gas fees remain high today, the incentive for players may be rapidly declining. The price of the game's SFF reward token has fallen sharply, dropping 52% over the last 24 hours to 61 cents per data from CoinGecko. It's now down 89% from the peak price of $5.75 on January 4th. Polygon's own Matic token is up nearly 7% today at a total of $2.24. Okay, so again, this is another situation where it points to just supply and demand. And it's very interesting that they were saying that they were updating the status of players every 25 minutes because the more players that you have on that, you're definitely going to have a big issue with congestion because of that. And it's very good that these problems are happening. These are what I call beautiful problems because at the end of the day, we still don't have, the whole entire world involved in this space, involved in crypto. There's still people who don't even know what it is or don't even know what Bitcoin is. So it's good that we handle these issues, and it's good that, these problems need to be solved by specific bodies of people, because ultimately that means that there's a demand in terms of jobs and that people can be put to work. And also that when the situation comes where there's another game that pops up and everybody just apes into it, it can handle the load. It can handle people rushing into it, or going in and rushing into this and deciding that they want to, join this and make money off this game. And people who want to deploy bots onto it as well, they can have the preparations necessary to do that. So ultimately we have that. The next story we got is from Cointelegraph, and it's about Nas, who's been on a tear recently. He just dropped his Magic album with Hit Boy, which is amazing. Nas and Hit Boy have been going off recently, and it's saying rapper Nas to let fans own part of his music through NFTs. Legendary hip-hop icon Nas will drop non-fungible tokens that let users own streaming royalty rights on songs Ultra Black and Rare. Nas has also dropped a masterclass too, and Nas has been going in. He's been having a resurgence, an amazing resurgence. I mean, his album King's Disease won a Grammy. Then he dropped King's Disease 2, which was crazy. Then he dropped, the masterclass, and then he dropped, the Magic album. Bro, he's been going off. Nas has been showing that, and this is a side note, but Nas has been showing that in terms of hip hop, because I'm an artist myself. I'm a recording artist, and I'm a musician overall, but I'm a recording artist myself. So obviously Nas is showing that, there is no age limit when it comes to music. And as long as you're good at what you do, you're good at what you do. And Nas is like 40, 47, 48 right now, going so hard. He's going in, and now he's making NFTs for his songs. So let's read on. Award-winning rapper Nas will release non-fungible tokens that will let his fans own a stake in two of his songs, Ultra Black and Rare. Users who buy and hold the NFTs, dubbed limited digital assets, will get the specified percentage of streaming royalty ownership depending on the token that they hold. Ultra Black comes from Nas's 2021 Grammy Award winning album King's Disease, while Rare is from the follow up 2022 Grammy nominated album King's Disease 2. The former song will have a limited supply of 760 tokens, while the latter will have 1,110 tokens. Both will be released on January 11, 2022, and buyers will be able to acquire the tokens on a first come, first served basis. So, these are going to sell out within like seconds. These are going to like sell out like crazy. So, that's good. Let's keep going. The LDAs will be sold through the NFT music platform Royal. This was the platform that Nas actually invested in that was created by Bilal back in November 2021. So it says here that Bilal told Cointelegraph that the platform's number one objective is to allow fans to co-own the music by their favorite artist. We're starting off with a curated group of artists for our initial sales, but we plan on opening up the platform to more artists in the future, Bilal said, which is something I'm definitely looking at too. I've been trying to figure out like with the next couple of songs that I'm planning to drop, because this year I'm planning to really go in when it comes to music, when it comes to just going in music. Like I've finally reached a point where I can be more consistent with what I'm doing. So I'm just going to be recording songs, getting videos out, doing photo shoots, just going ham and just reaching my community. Like this is actually my alternate page where I'm talking about crypto. I'm talking about health, wealth, and the world at large, because I don't want to I don't want to muddy up that music page. I want to keep the music page on music. I don't want to keep this on all the other stuff. But this is another platform. We have Royal, we have Audius, and of course you can make NFTs with your music on, OpenSea and Rarible and those platforms. But it's going to be interesting to see which platform ultimately is the best when it comes to this. And we see that Royal already has, some backing from Nas. Nas is also somebody who's hedging his bets as well, because he invested money in Audius too. And another angle to look at as well is what I'm gonna mention after I read this paragraph. So Nas also reportedly invested in one of the biggest exchange platforms, Coinbase, when it went public last year. In a song with DJ Khaled and Jay-Z, Nas bragged about his crypto wealth and Coinbase investment. Coinbase, basically cryptocurrency Scarface, says Nas in the song's lyrics. In addition to Nas, prominent rapper Eminem recently joined the Bored Ape Yacht Club after reportedly buying a Bored Ape named Eminape for $462,000 and OpenSea, which we mentioned earlier in the week. The rapper is known to own several other NFTs such as Die Tag Dog, number one, and Superlative Apes 3880. So big news, Nas dropping an NFT for two of his songs off his recently critically acclaimed albums, King's Disease 1 and King's Disease 2. So, if you're a Nas fan, look out for that. Look out for those two songs having NFTs dropped on them. And then, ultimately, for the OG artist like Nas, this is great, because people who have already invested in his career will be much more incentivized to, invest in him and invest in these songs. It's a no-brainer. And on the flip side, for, YG artists like me, I'm going to be dropping NFTs with all of my songs so you can be a part of the journey early on. So if you want to get that song early and the song blows up and we're sharing the revenue of the streamings, then, you're going to be much more incentivized. You're going to feel way better because you're making money with me. You're not only helping me make money, but you're making money with me by, investing in the NFTs, investing in me as an artist. And this is ultimately why I think music is going to have an uptick in value. Music is going to start being valued way more than it was before because of that. Because of, the ability to invest in an artist now with NFTs and watch as their name grows, because it's not like I'm just going to be dropping NFTs and then just sitting around. No, I'm going to be dropping NFTs and I'm going to be continuing to market my music. So it's like now the fan base is early on gathering up and is really like, you know, you're a part of it really early on, and you can say that. There's a lot of people who nowadays, we used to say, yo, we was listening to this artist from jump, from early, from this album, from that album, and we talk about this mixtape and that, mixtape that was coming out from this artist. And now it's not really that easy for somebody to say, yo, I've been listening to this dude from early on because I've been listening to this project, because now all of their music is at your disposal and you can just start listening. You can there can be an artist that I've never listened to before. I don't know. I'll give an example. Friggin' I don't know. Let me think about somebody like Mr. Swipey or something like that. Right? I can go in and listen to every single Mr. Swipey song from the beginning and be like, oh, boom. I was listening to his stuff from the beginning. I was listening to his stuff from jump. I can be completely capping. I can just cap the whole way through and nobody would know and nobody would say anything. But now, if somebody is like, yo, I've been listening to Vantum from early on. I've been listening to Vantum from his early tracks, from his early projects. And people like, word? I'm like, yeah, I got the NFTs and everything, bro. I got the NFTs. I made mad bread off these NFTs, this, that, and the third. So I love that Nas is getting in on this, and I don't know who put the bug in Nas's ear, but Nas has been really on a tear. He's been on fire recently. He's really been going in. Ever since he got that Ring investment, he invested in Ring, and now Ring is a huge company, and I think he made $100 million off that project. I think he invested in Lyft as well. He was just going in and investing and investing and investing, and that's another thing that I'm noticing from the OG artists that are seasoned and are in the game, for a long period of time. And even guys like Rick Ross, 2 Chainz, Jay-Z, 50, all of the artists who come into the game, Nas is the only exception because Nas was a child prodigy. Because Nas came in when he was 18, 19, came out with Illmatic, then came out with It Was Written, then was dropping all these platinum albums. And then he had a period where he had a valley. He had a peak and then he had a valley. Nas always had his peaks and the valleys. Every artist has it. But he had a period where a lot of people were not checking for Nas as much. And then we seen him, have this resurgence with the Nazir album that he dropped with Kanye. When he dropped the album with Kanye, and that was a crazy summer for Kanye, where Kanye was making all these projects for everybody. Made a project for Pusha T, made a project for Nas, whatever. But when Nas came back with that's when he had this resurgence and he came back up. And it shows you that, as much as they try to say that music is a young man's game or a young man's sport, it's not. It's really not. Even people like Bill Withers, people don't even know, but Bill Withers, his first hit, he was 33 years old. He wasn't even in the music like that crazy. He wasn't a prodigy like that. He started playing guitar later on in his life, in his in his late 20s. Started learning how to play guitar, then made Ain't No Sunshine, and Ain't No Sunshine blew up as a song. Then he made more hits. So to this day, people still play those songs. People still play Lovely Day and Ain't No Sunshine and all those other songs that he made. And he started when he was 33. But because he started at such a more mature age where his brain was more developed, he was able to make better decisions. And you see right now, how Nas is making these better decisions, and we're not seeing the younger artists dropping NFTs like this. We're not seeing. I'm surprised Drake hasn't dropped an NFT yet. I haven't seen these dudes dropping the NFTs. But the crazy part about it is, I think one aspect to it is because of the fact that I don't think Nas is signed anymore to a major label. I don't think Nas is signed to a major label right now. I think Nas is completely independent or with his own label, which is Mass Appeal. So yeah, I'm looking at it, and he might still be on Def Jam. I'm not sure, because that's another question that I had, which we were talking about before, about how are the record label is going to move with more artists dropping music NFTs. And this actually shows how, if you're an independent artist, right now is a beautiful time to be alive, because now we really can put the work in and see the benefits, and we can reap the benefits for that. We can reap the benefits of our labor. The harder we go, the more focused we are, the more diligent we are, the better it is. So I'm looking, Nas's last album was dropped independently on his own label. King's Disease 2 was dropped independently as well. It looked like he dropped it with The Orchard. I guess he probably did distribution with them. So he probably did a distribution deal with The Orchard, but you see, it's still his label. It's still his label, Mass Appeal, and then King's Disease 1 was again on Mass Appeal. So this is why Nas is proving what even Prince was talking about before, about ownership, owning your music, owning your masters. And with NFTs and artists of musical caliber, of of a painting caliber, of any kind of artist, you have now ownership, and you can go in and you can say, I'm gonna give out these NFTs on this platform. So I'm grateful to Nas. I'm 100% grateful to Nas for doing this and showing that it's more than doable and it's gonna happen, and he's paving the way as the OG artist that he is, to show us as the younger artists what we need to be doing. We need to be taking the money from the NFTs that we sell and from the streaming royalties that we get, share the wealth, and not only share the wealth, but then invest in these projects that we believe in, that will have legs and that will create an impact in the future. So definitely good stuff from Nas. Definitely good stuff from Nas. Moving on to the next story. I was trying to find it. I don't know where it went. It just disappeared out of the clear blue sky. But okay, so the next story we have is crypto scammers brought in 14 billion with a B, $billion in 2021. And this is coming from News BTC. So let's read on with that. According to blockchain research firm Chainalysis, scam involving crypto reached an all-time high of $14 billion last year, a record that comes as regulators demand more power over the fast-growing sector. Growing interest in crypto fueled most scams. Cryptocurrency crime set a new high in 2021, according to a recent analysis, with scammers stealing $14 billion worth of cryptocurrency. According to the 2022 Crypto Crime Report released by Blockchain Data from Chainalysis on Thursday, January 6th, that's nearly double the 7.8 billion stolen by fraudsters in 2020. So scamming is going up. There's a whole bunch of people running around Miami right now in Lamborghinis. Their findings come amid heated debates over how to regulate cryptocurrency, with regulators keen to protect the growing class of small investors who are flocking to digital currencies. With the recent surge in cryptocurrency interest, it's no surprise that Olympic-level scammers have seen new chances for illegal conduct, according to William E. Quigley, a notable investor and co-founder of the Wax blockchain. Quigley stated during a panel discussion held by blockchain firm Lightnode Media last month that the high-tech aspect of crypto will continue to attract clever crooks. Consider the recent Squid Game scam, in which investors claim that a new Squid cryptocurrency token and associated immersive online game were nothing more than a con. According to investors, the creators vanished when the currency's value soared, and they seemed to pay out with more than $3 million. By absolute numbers, crime is still growing, but the ecosystem is becoming safer. And of course, there are a lot of caveats to that, said Kim Grauer, Chainalysis' director of research. Newcomers have been lured in by the promise of quick returns claimed by crypto proponents, as well as notion as well as the notion that Bitcoin may be used to hedge against rising inflation. Despite this, cryptocurrencies are still subject to inconsistent regulation, leaving investors vulnerable to fraud. The majority of criminal earnings has always come from financial scams, according to the firm's findings during the last 5 years. However, as Bitcoin has grown at a breakneck pace, overall economic activity across all blockchains has increased from $2.3 trillion to $15.8 trillion, diminishing the importance of criminal activities. So DeFi transactions had a lot of scam. According to Chainalysis data, DeFi transactions increased by 912% in 2021. Decentralized tokens like Shiba Inu have had impressive gains, which has fueled a feeding frenzy among DeFi tokens. When it comes to dealing with in this immature crypto economy, however, there are a number of red flags. According to Kim Grauer, Chainalysis' head of research, one issue with DeFi is that many of the new protocols being introduced have coding weaknesses that hackers can exploit. In 2021, these code exploits were used 21% of all hacking attempts. In 2021, criminals stole $3.2 billion in cryptocurrencies, with DeFi protocol hacks or exploits accounting for 72%. SEC Chair Gary Gensler told Yahoo Finance in October that DeFi will end badly unless investor protections are strengthened. The Commodities and Future Trading Commission fined DeFi protocol Polymarket $1.4 million earlier this week for operating an unregistered binary options market and ordered the protocol to wind down its operations. So I don't know what the last paragraph had to do with anything, but the theme is continuing on with what we've been talking about since I've started making these news updates about DeFi, NFTs, all those things, but in terms of protection and why we need more white hat hackers in the space. We need more people to be a part of these bounty programs to, nitpick the code and look at it and say, this is what's wrong. If you don't fix this, scammers are going to come in and take this, that, and the third. And, there's a lot of people who are already, in computer science and are software, developers and engineers, but that doesn't mean that we need more. And we're going to need more as the crypto economy grows, as DeFi grows, because, they're saying that there's 15.8 trillion, but in reality situation, that's nothing compared to the global wealth. If we're talking about global wealth, we're talking about like quadrillion of like the whole entire world's wealth, quadrillion. And that's the direction that things are moving in. So as there's more crypto scammers, which you're definitely going to expect, we're going to need more people to point out the exploits in all of these blockchain networks and all these protocols before the hackers do and take the money and just don't tell you anything, because they're not entitled to tell you anything. This is why bounty programs exist, because they don't have to tell you that there's an exploit in your code that they're going to use and rug pull or make money. Not rug pull, but make money. They don't have to create a coin and tell people what it is and then not rug pull people from it, especially in a space like crypto where it's a wild west in a sense. Right now crypto is like this digital economic anarchy, and in order for an anarchy to thrive peacefully, we have to have balance and we have to have discipline. So we need more people in this space who are the white hat hackers to go in and to protect it and create more cybersecurity measures to help people protect themselves. On the other end of it, though, people just have to, be smarter and not be greedy. A lot of people, when they get too greedy, and it's not just greed, it's a scarcity mindset. When a lot of people combine greed with a scarcity mindset and ignorance, there's the most deadliest cocktail, because you're always going to lose your money when you're operating from a a mode of lack, when you're operating from a mode of you really need to get it and you want to try to get it as much. You can't think like a rat. You can't think like a hungry rat in this regard, chewing on anything that you can find, hoping that you can get some, some juice out of it. Because that's how you run into, oh, we're making a Squid Game cryptocurrency, and then you get scammed as a result of it. Because of situations like that. Like, that's so convenient. Why, like, people have to think, you have to use your brain. And I noticed that more and more people are not using their brains as much. They're letting AI, and they're letting the laptop, and the letting their phones, think for them. And this is what the powers that be want. They want people they want people to delegate their thought onto, them and the, systems that they've created. And ultimately, that's what leads you back to centralizations and using CBDCs and being, pretty much a slave who cannot even speak up about any issue. Because if you speak up about any issue, let's say that the system is being run by, PEDOs. If the system is run by PEDOs and you speak out against the PEDOs, then guess what? They can use their powers because they run the CBDCs, and they can shut down your assets. They can shut down your bank account because you're speaking out against PEDOs. Even when you know that being a PEDO is horrible, is egregious, is atrocious, it's wrong. But because they run the system, they can dictate who and what is allowed to operate within that system. And that's why, if you don't have the discipline, or if you don't have just the street smarts to say, hold on, this might be a scam, then you're going to get scammed. And this is why, in a way, I'm grateful to have been from a place like New York, where people are so scammy over there, and been in places like Miami where people are real scammy over there too. And I mean, comment your experiences. I definitely have to remember to tell people, to comment, like, subscribe, whatever, but comment your experiences on if you've ever been hacked in this industry, or in general, on the street. And your experiences, after that, and how you were more diligent, you were more wary, you were paying more attention. Especially in crypto, you have to protect yourself. You have to protect yourself in crypto, because I'll see people on Reddit talking about they were scammed, this, that, and the third, but they'll never tell you what stupid thing they did to get scammed in the first place. They're never going to tell you that. They're just going to tell you that they got scammed, but they're never going to tell you how, when, and why they got scammed. So that's another thing. Take responsibility for your actions and just protect yourself. If you have crypto and you're not going to do anything with it but hold it, put it on a cold wallet, put it on a hardware wallet, and put it to the side. Keep it in your room. That's it. Take your freaking, get one of those metal paper wallets. Get one of those metal wallets where you can put in your keys, and then when you need to get that out, you have that there. Get a couple of them. You have to treat this like, right now, what crypto is you are your own bank. That is what this industry is doing. This industry is allowing every single person in the world to become their own bank, or join forces with other people in the world to create their own bank, to create a community bank. So making it easier for the community to bank its own money. So on an individual level, you have to protect yourself. And if everybody is protecting themselves and protecting their crypto and looking out for the scams and looking out for all of those things, then we can move in a direction of not, having to hear from people like Gary Gensler trying to say DeFi is going to fail, because they want it to fail, because they want you to stay within the, centralized banking system. So yeah, those things are definitely important. Let's keep moving in that direction. So ultimately, I hope you guys have, left this learning more about the industry, learning more about the news, seeing what's going on. And, ultimately, I hope you have a great day. Peace.